here again. And today we are going to be talking about the Volatility 100 index. So I think this is going to be one of the first time I'm posting about this particular chart. So I want to drop a lot of analysis concerning almost all the volatility pairs and all cryptocurrencies, stocks, and all of that. So you all can be able to, it can be able to help you with a vast knowledge about the financial market. So now on this particular pair, we can clearly see that during 2023, we had market plunge to the upside, and this is what we simply had. So this is what we simply had. We had markets rallying to the upside. And then we can clearly see also at this point, we had market rally to the upside here. So this was an uptrend. At this point, one will be looking for more of buys. So the moment market actually gave a break of structure or a break of trend line, it's also a break of structure and a break of trend line, which is basically at this particular section. So at this particular section here, we got a break of structure, which was this break of the previous higher high. This higher high got taken out, and then we also got this low taken out. So that was what we got on this market. We can see we got break of trend line at this area here. This candlestick was one which really gave us the break of trend line, and within that break of trend line, we also got a break of structure around this area, which markets did reverse test and all of that and then dropped. So we are not really after that particular move. I'm just trying to give you guys an information on what happened there. Now, after that happened, we saw markets plunge massively to the downside, creating breaks of structures to the downside. So we can just simply see there was a downtrend. After the break of structure, there was a downtrend. And now, after that happened, we saw markets rally into the upside, where we can consider that the market went to clear out all of this liquidity sitting at these areas. So we can see liquidity sat here, and also around here there was a lot of liquidity. So markets went up to clear those liquidity. You understand? Because in addition to this liquidity, apart from this break of structure, we had, I know this will begin to make my chart a little bit messy, but I'm passing information. If you follow what I'm analyzing, you will get what I'm saying. So at this point, we also got a break of structure after this one. We got a break of structure also at this point. And then we got a break of structure also at this point. So these are the levels, or these are the areas we got break of structure while market was dropping. So we got another break of structure also at this point. I just want to make it a little bit exact. So we got another break of structure around here. We got another one here actually around here, and we got another break of structure also at this point. So now this particular break of structure was the one which got invalidated because it came with a liquidity grab here. So expectations were high that markets would, from this point, massively drop to the downside before markets rallied to the upside to clear all of this liquidity. So if we should see what happened here, we'll clearly see that the market went into tapping the 0.618 level or thereabouts. So let's check what happened. So if you can see what happened on the market here, you will clearly see that market actually tapped into the 0.618 level. So you can see that market actually clearly tapped into the 0.618 level. Now this is we are analyzing, we are basically back testing so that now, because I don't really trade this volatility 100 often, but before I get to analyze what is currently happening in the market, I always do my back testing. So my back testing is what gives me strength to be able to give a well and a proper defined analysis on the current market chart. So now, this being the case, what will now be our mode of entry? Based on this, our mode of entry will basically be from this point without doing a refining of the zone like the one we did in the past video, the volatility 25 trade. So without doing all of those refining, we get markets massively drop into this level. So this ideally is our take profit. So this ideally is our take profit before markets can maybe begin to create structures to come and clear this liquidity and all of that. So now what can we see? We can clearly see also that market has broken structure at this point. So this is actually where this structure of this particular push to the upside is. So this was where market broke structure, and we can see this is actually the target. So from where market actually hits, market has been dropping. So anything we'll be looking out to do is to sell between, we want to sell between this space. So we want to look for sells into this area, and then this is our high. So that is actually the bone of contention on this particular analysis. So what can we also see? We can clearly see that market broke structure at this point, and then we could look out for reversal. So we can see break of structure, reversal into this zone between this break, and then that is the reason for this entry here. So now let's go to the smaller time frame so that I can make things clearer for you all. So now when we come to the smaller time frame, what can we see? We can clearly see that market broke structure here on the smaller time frame. So I think I'll be adjusting our analysis to the 4 hours time frame so you guys can see the market clearer. But before that, what we are actually wanting to do is to mark between this high and this point here, this low, and we would clearly see that the market came into the 0.618 level for a test. So we clearly see that market came into the 0.618 level, and then this is a short from this point. This is a short from that point, and then where will we be targeting? Now, ideally, we're supposed to target this point. But now, because we already understand the trend, we could target this point, but we will not target here directly. We'll have to do our breakdown analysis to get the move to this point. So now, this is actually our ideal setup for this current market. So what do? Now, I was actually explaining something before I got into this. So this is actually the move. We would still come to pick out an entry from around here, a possible entry from around here, which we'll be getting maybe from this smaller break of structure, this liquidity grab and all of that. So now let us go to the smaller zone. In order to go to the smaller zone, I would simply go to the, let me use the 1 hour time frame. Now it will actually produce a lot of candlesticks for us to monitor and look at, but we are equal to the tax. We can do that. So now what happened? Coming from this area here, coming from this spot, what can we clearly see? We can clearly see that market first of all gave us our break of structure at this point. This was a point market reacted from, and then with our Fibonacci 2, what do? We mark from the high. It also gave us liquidity grab. I would mark the liquidity grab for you guys to see. So this here is the liquidity grab. So this here is the liquidity grab. So we saw market got into this level. Got into this level, gave us our liquidity grab at this point, then gave us our break of structure at this point also, and gave us a very wonderful entry also, a second entry. So now this is for this, and then what do? We ideally have to put our entry at this point, and when we took our trade when market got into our level, it gave us a kind of retracement to the upside before getting to hit our take profits, which is here. But now, if you had not taken this trade and you were not here when market got into this point, you would have had another opportunity to get into the market. And where is that opportunity? The opportunity came up here where you would mark your rally, where you would mark your level of your point A, and then you would mark this level. So when you mark this level, let's see what happened. When you mark this level, you will clearly see that I'll use a line graph. So we'll clearly see that market got into this level here and give us an entry to the downside. And then what do we do again? Market reversed again into this point after this drop to the downside, hitting take profit of this entry. You would readjust it to this point, and then you can see that market got into our 0.79 level here, where you would have adjusted your take profit also again, your stop loss. So you would enter from here, put your stop loss here, and then you take profit here. So that was actually what market did at that point. So in all, oh sorry, let's put that back. So that was for this particular move. So in all, we would clearly understand that this setup works a lot. This strategy, I mean, it works a lot. So now we'll find that happened, and then what was the next thing? Market dropped to the downside. It's created a break of structure here. It created a smaller break of structure at this point. Then it's created our swing high, which will plot with the swing low, and market reversed into this point, getting to our 0.79 level and giving us our entry. Giving us our entry with the RICS, and then relating it with our take profit level. Relating it to our take profit level, and then that was that for this particular entry. Now after that happened, we can clearly see that what happened again, market broke all of all these zones to the upside, broke structure at this point, came back, retested it, giving us a reversal structure, and then it simply did what? It hit the major level here, which would pattern with this area here, and then clearly run it to this point. And what can we see? We can see the market got into our 0.618 level, putting our stop loss here, and then putting our take profits here. So what do? We also got an entry, placed our stop loss, and we placed our take profit here. So this was another entry we had on the volatility test. So now, that being said, market hit take profit, and we had all of that happening all the way. We had all of that happening on the way. So Right from then, we simply still got another entry around here. I will just do that one last one. We got another entry also around here from this point to this area, and then market got into our 0.618 level. This was our level for stop loss. This was our level for take profit. So this was it basically. So and then market began to give us different reactions where we got market drop here, came into this level, reacted, then gave us a double top, gave us a double bottom, pushed up, breaking structure at this point, came down, reacted with this zone, hit take profits, came down, reacted with this zone, and then hit take profits here. And then up from this point where it hit take profits, 1 hour time frame, it has been dropping massively. It gave us a break of structure on smaller time frame around here, dropped, gave us another break of structure, reacting from this area here, and then market has been dropping. So is it good to enter at the moment? So I'll put it on 4 hours time frame so that I can see a bigger structure of this market and have the best idea to give you guys on what to do. So I believe you would actually have to wait for market to retrace and give us an entry point. So we would actually have to wait for market to break this level, see a retracement around this point, at least marking it with this point and the new zone that we created, and then we take our shots to this point. So for now, anyone who had entered here would actually still be holding. This is going to be his first take profit, and then on an overall level, this is going to be the final take profit. So volatility 100, I have dropped the signal on what you should be doing on volatility 100, and I believe this video was helpful and very informative to all of you. Have a wonderful day, guys. Peace. The RFX Academy.